Hello, everyone. I'm Hal Levy with Pymnts.com, and I'm joined today by Michael Haney, who is head of digital core at Technisys. We're happy to have you with us. Thank you for joining us.
Yeah, thanks so much for having me, Hal.
We are discussing today the idea of how banks and FIs can accelerate their digital presence to deepen consumer relationships, to stay competitive, to be able to take advantage of technology and serve a variety of different needs out there. To do so, there are a number of things they need to consider. Let's talk a little bit about this. When we are looking at the very concept and execution of digital transformation, let's talk a little bit about how that has evolved in banking over the years. You could also give us some insight into how you yourself, as your firm, has evolved as well in that marketplace.
Sure. So I've been doing this approaching 30 years. So I've witnessed a number of different what we'll call waves of digital transformation and how the definition has changed over time. So we can actually start in the 1990s. That's when I began my career as well. Big banks like UBS and Citibank back in those days, where digital really meant self-service channels, what we now think of as internet banking or web banking, and of course, more recently, mobile banking. And the focus was on self-service and the problem I'm solving, right, is how do I allow banking to happen when the customer wants, not necessarily around branch opening hours. And so it was a completely different problem that was trying to be solved back then. And one could even argue it began before internet and mobile, in the era of ATMs and IVR systems and the like. But if we go back that far, the 70s, 80s, and 90s were all about how do I create those self-service channels. Starting in the 2000s, we started to see a shift away of how do I digitize the physical world within the bank. So think paper, right? Think of all the paper we used to get, not just monthly statements, but almost every notification legally came to you, the customer, in the postal mail. So much paper involved plastic, right? We're rapidly moving away from carrying around plastic debit cards and credit cards, physical checkbooks. All of this stuff is slowly being digitized away. And the last of the three Ps is actually people themselves, right? How do I adopt the various types of artificial intelligence? How do I adopt full automation of business processes and customer journeys? How do I start integrating systems more and more together so that the people element also starts getting out of the bank, which not only speeds up productivity and efficiency, but also helps to reduce human error, reduce the cost of the bank, and those types of things. I think the newest wave of digital is really about solving the problem that we have, that even though these first two waves brought a lot of benefits to the industry and a lot of change to the industry, they really did lock in existing business operating models. This new wave is really about changing what banking means, bringing banking into different points of need than what we had in the past, being able to compose new offerings and new products and services for customers that we were unable to do before. So by really getting to the guts of banking and digitizing it down to its core, we're starting to see actually new types of products and services emerge. And I think that's really going to be the exciting journey for the next 10 years that we haven't seen in that past.
One, I think, overarching theme runs through all of us through the decades, and that's that self-service component. And we're now in a phase where mobile is the self-service conduit, right? And maybe the ultimate way to do that, which brings an interesting challenge for traditional FIs. As you mentioned earlier, they had been busy making a self-service component for traditional offerings, and maybe in-person banking and using hardware in the branch and doing all sorts of things like that. But now, with mobile in the middle of it, pretty much any provider can wind up promoting and offering that self-service component, particularly the fintechs.
Yeah.
right? So that presents a little bit of a challenge. I'd love to get a sense from you as we're headed toward an age where 90% of us are using, in the US, mobile banking channels, and any number of billions of people will be doing so over the next couple of years. How can banks start to look at their own digital roadmaps with some experience of that self-service goal and model and start to compete with the fintechs who have been self-service from the get-go?
Yes, absolutely. So you're correct 100% that mobile is now currently the preferred channel for most people, not only in the United States but around the world. And in some countries that in the developing markets, for example, where maybe they didn't have a large existing branch base, they were able to leapfrog directly to mobile. And the beauty of mobile, again, is that it works around you, the customer's time. If you want to bank at midnight or you want to bank on the weekend, no problem. You don't have to think about things like open hours of those channels. Is the staff there? Is the bank going through batch process right now? And so you're also right that the digital challengers were able to leapfrog in some cases by building from scratch a brand new mobile layer with the latest thinking around user experience. And the banks then had to sort of catch up. And it's been kind of a healthy competition that the banks have now at a point where they're rapidly catching up, or in some cases, they've even exceeded what the digital challengers can do. Because the digital challengers, don't forget, they're not licensed and chartered banks. And because they're new, they don't have the depth and breadth of products and services that the legacy banks have. And they often don't have the deep pockets that a top US bank might have. So some of those top banks are actually now scoring better from a customer experience point of view, the amount of services that they offer on their mobile channels. And so they truly have caught up and exceeded. But one thing I've learned in my career is that the channel preferences continue to evolve rapidly, and we can't always foresee where it's going. I think now the concept of embedding your banking into social media, messaging apps, the Internet of Things, right? Now I can bank on my smartwatch, or I can bank through my smart speaker. But more importantly, banking in channels that I don't own directly. And even in non-financial brands, and bringing banking to the point of need and not just limiting it to your own branded channels. So we are going to see this mix of channel usage change over time. Mobile may not stay dominant forever. And the other thing I've learned is that no channel truly ever dies. I can still write a letter to my bank, send it to their contact center, and legally they have to respond to me. Which is quite an interesting thing. So that volume, transaction volumes and query volumes change from channel to channel, but no channel truly dies. And one of the things that we do know, which is an advantage of incumbent banks, is that users that tend to be active on more than one channel tend to be more profitable for the bank and also have higher satisfaction and loyalty scores for that bank. So that'll be interesting to watch, to see how do the digital challengers fare in an environment where we know multi-channel is a succeeding formula.
I want to take that statement, no channel truly dies, because I think that drives something in terms of a competitive advantage for the banks. And maybe you could elaborate on that. When we get to that idea, and if no channel dies and you have the ability to have an omni-channel intuitive experience across any number of conduits, what does a fully realized digital banking omni-channel experience look like in almost an aspirational way? Because we have the ability to set forth some hyper personalization. You have the chance to deepen consumer relationships, and the banks have all of that in terms of breadth at their disposal. Tell me a bit about that. What does it look like?
Yeah, well, I think first we have to recognize that not every bank is going to, I'm just going to limit it right now to consumer or retail banking for the moment, because that's often easier for us to discuss. Not every bank will want to play the same role in the ecosystem, right? So if you've got a big nationwide bank, right, your Wells Fargo, your JP Morgan Chase, your Bank of America, These are very powerful brands, and we see them everywhere. And there's still a bit of resonance, right, for the customer. There's a bit of comfort that the branch is down there if I need it, even though I may not use it on a regular basis. And all the way to having, the latest, greatest digital self-service channels and everything in between. And so there are going to be a set of banks that are going to want to maintain all of those channels and be front and center and have their brand front and center. And what you're going to see there is that journeys, historically, we used to build them in the channel, and that created a lot of redundancy and a lot of kind of mismatched experiences and inability to do a journey across channels. Those journeys are being pushed into the middle of the bank. And so the journey can start and end on different channels, and it can be sort of self-aware of the form factor or the channel that the customer is currently using, and all the information kind of flows with it. So if you're doing an extremely long and complex journey, like a mortgage origination, I could be doing that across a number of different channels. Today I want to go and get help from the mortgage broker in the branch, and then tomorrow I want to go home and start uploading documents online, and every kind of combination in between. Other banks are going to want to be happier and okay with not having their brand front and center, and they're going to be more interested in this banking as a service or embedded finance game. They perhaps realize that for them to build the brand awareness from coast to coast is going to be a very expensive and long journey that with the potential to fail, that it's wiser for them to be the brand behind the brand, right? And so you're going to, as I mentioned before, as this concept of point of need really starts to take off, and the technology enables me to put my products and services into a non-banking brand, retail and e-commerce, travel and hospitality, logistics and transportation, you name it. We're starting to see these banks, sort of API their way into all these other journeys and experiences. And so you're going to have banks that excel at, let's call it the plumbing, and be more of a utility, high, still regulated, but, they're going to master efficiency, productivity in the back end. And then, of course, there'll be banks that will do both. But you really have to kind of say, what kind of bank do I want to be in the future? And will I excel at both? Because not all banks are really going to be able to do that.
You're touching on some of the thoughts I had earlier for my next question, which was the idea of, some of the technological challenges, roadmaps, speed bumps that have been there that have prevented historically a bank from or being digital first in its approach, and maybe really leveraging not just the data, but the consumer relationship that's already been in place. So you touched on it. Some banks have expertise in certain ways and will attack the plumbing, and there's certainly there's the opportunity to start to future-proof things as we go forward. So let's talk about that a little bit. No strategy is perfect, and no digital strategy winds up being perfect. But I would guess that banks have a little bit of an urgency and a mindset shift that needs to take place if they start to future-proof the digital banking approach and experience. What can they learn from past mistakes and what their competitors are doing to start to embrace a future-proofing mindset now, but also going forward?
Yeah, I think you hit the key word there, which is mindset, right? It's not even about having the perfect model or having things succeed or fail. It's about that willingness to embrace change, right? And to be willing to experiment and adjust as the parameters around you change. Not every bank, banks kind of have that reputation from the past, right? Of not being risk takers, not open to change. And I think, the banks that are succeeding today, of course, have taken that playbook, not only from the digital challengers, but from other industries and other markets, that whole, let's call it Silicon Valley mindset. There's this acronym used in the technology industry, CI/CD, right? This concept of sort of continuous innovation, continuous integration, continuous delivery. We all know this in our personal lives because you lay down your smartphone at the end of the day, and overnight while you're sleeping and it's charging, all the apps are updating, and you wake up and you suddenly have a new Facebook app or a new mail app or whatever. Banks, don't necessarily need to be that extreme, but they have to be willing to have this concept of continuous innovation and not be afraid to adjust and fail and get out of this sort of rigid, I'm going to create a 5-year project and I have X amount of dollars and I have these milestones to reach along the way. There's value in that, but they have to be more adaptable. And we see banks like JP Morgan Chase, for example, it's very evident that at the top of the house with Jamie Dimon, he's not afraid to experiment. Like, look what he's doing. We're launching a new digital retail bank in the UK, and they have no experience with international consumer banking, and he's willing to take a loss on it for a couple of years. He's willing. We just saw a big article, of course, of what does the future look like in a FedNow world, right, with real-time payments. What happens to my credit card business, and challenging his consumer and corporate bank to start solving for that. So you kind of have to have that mindset, and you kind of have to reject mindsets around if it's not made here, it's not good. Don't be afraid to work with consultancies and system integrators and software vendors. Don't be afraid of new delivery and runtime models like SaaS. Embrace the cloud. And the most important thing of all is, the industry is horrifically siloed, right, by product and business line, and the banks reflect that for generations. And it's partly because that's also the way they're regulated, but it's also partly just how they grew over the decades. Put the customer at the center, embrace these kind of concepts like design thinking, co-creating, co-innovating with customers, right? In these new ways we collaborate with customers, get them involved in beta testing, pilot testing, all of that. That's going to be super key and probably the most important of all the things I've just mentioned.
Well, you're talking about also a broadening of the mindset, the approach of who you work with, how you work with them. You had a good point. Just because it isn't done here doesn't mean it's not useful. And I think that's a good point too. A broadening of approach leads to future proofing, and also spark some ideas that may not have come organically. Right. So Michael, if there's anything I've missed that we've discussed, I'd love to hear at the last moment or two of yours.
Yeah, sure. Well, one of the themes that we wanted to highlight today is, and you kind of mentioned it at the earlier part of the call, as banks have gotten larger and we've moved away from a world where the bank is at the center of the community on the main street, and your local banker would, in the deep past, right, would get to know you and make whatever credit decisionings based on the fact that they knew you were the local baker in the town and you had a good reputation and I trust you. A lot of technology right now is trying to bring back that human element to banking, because we've digitized it, we've made it self-service, we removed a lot of the relationship management away from the end consumer. We built scale, we built efficiency, all these things are wonderful, but then how do we now take the technology and rehumanize banking? So we're looking at it from a number of different dimensions. You mentioned data earlier on. Data is going to be key. How do I aggregate, cleanse, categorize data? How do I generate insights from that data? And how do I make those insights actionable? It could be something as simple as data visualization on the screen for you or the banker to understand, am I about to go negative in my account and have a non-sufficient fund event? Or am I meeting my savings and investment goals to buy the new house or to retire? Could be as simple as alerts and notifications, reminders to get certain things done. But data is going to be key to bringing back this human element, and also not just key for the end customer, but key for the bank, right? The banks are always struggling to figure out what I call the 5 R's, right? Right product, right customer, right price, right time, right channel. The second element is what we call conversational banking, right? These digital self-service channels are great, but we all sort of have fatigue in filling out electric forms, right? E-forms, and pushing a lot of buttons, and then not always understanding why that is being asked or what they really are looking for in that data field. So we're starting to see a pickup in a type of artificial intelligence that we call natural language processing, right? NLP. So I have these preferred channels, right? Mobile app or internet banking on a desktop or laptop. I want to stay in my preferred channels, but I want the bank to be able to engage me in what we'll call plain English, whether that's spoken or written. And I want the bank to understand me. And, but this can be expensive for the bank, right? Because workers are not cheap, branch-based staff are not cheap. So you can put a natural language processor in there and create, chat bots or intelligent virtual assistant-like experiences. And then if the customer requests to switch to the human, or the chatbot recognizes, right, I can't answer that question, or I can sense, right now there's new technologies to sense frustration. So we call that sentiment analysis, and it switches you to a human. But the good news is it takes that whole chat history with it, so that the agent who takes over isn't starting from scratch. And it also, most importantly, you're remaining in that channel of choice for the customer. We've already talked about a third dimension of humanizing banking is I don't want all my banking to be in bank-owned channels. I need it, the simplest example, which we're all used to from the last 30, 40, 50 years, is I'm shopping in a store and I want to pay for my goods and services. Imagine if you had to leave your restaurant or your store, walk to the bank branch, get the money, and then come back to the store, right? That sounds ridiculous in this day and age. Because I just swipe my credit card or my debit card and I'm good to go. And, now I have digital wallets doing the same kind of experience. So we all know and recognize embedded banking from these use cases, but now we're starting to see it explode, right? I'm setting up my new Tesla and immediately I have insurance options on the spot as part of the car buying experience. I'm buying a ticket on delta.com, an airline ticket, and I can rent my car, I can rent my hotel, I can buy travel insurance, I can pay for my tickets, all while remaining in that non-financial brand, an airline brand, right? So we're starting to see this point of need concept really taking off and being further empowered through the use of this new technology we call APIs, right? And then, of course, you did mention earlier on the call, we're seeing completely new offerings that we never were able to see before, because we used to not only build the bank in these product silos, but we would also build the systems in product silos. Imagine a world where, buy now, pay later, early wage asset, roundup savings, all these things require me to have building blocks from the payments world, the lending world, and the deposits world, and reassemble them in completely different ways. You can't do that with a COBOL and mainframe system. You can do that when my Lego building blocks are microservices, and now I can start to recompose them in completely different ways and generate things which we're now starting to take for granted, right? Shopping using buy now, pay later. The banks are getting into the games, and not just the fintechs, but it's not possible on some of these legacy architectures. But ultimately, what that means is, these customers have a need, and the banks were unable to fulfill those needs, and the newer digital challengers reassembled things in new and unique ways, and in sort of humanized banking in that aspect, right? Now the banks are able to catch up. So humanization, I think, is going to be this huge wave that's going to be at a higher level theme, but could be with us for the next 10, 20, 25 years.
A breaking down of silos, a rearranging right through the process, and then also, as you said, at every point of need, interaction, and contact, which is really, I think, the goal of any successful business, banking 100%. In particular. Michael, I thank you for the time, for the insight, for the education, for the comments. I hope we'll do it again.
Yeah, I enjoyed it very much. Thanks, Hal.
Likewise.